Good evening. This is Brian Shannon from Alpha Trends Blogspot. It is Wednesday, August 6th, 2006. And let's go ahead and take a look at some ideas so we can hopefully make some money tomorrow. Today we had a little bit of a pullback in the market. Actually, I think they were saying it was the largest one-day loss in the last 2 months or something like that. My belief is that we're still in a healthy uptrend, and we may not have seen the end of this little pullback. I think it's too early to say whether it's going to turn into something more serious, but we'll obviously keep a vigilant eye on any important levels of support that get broken. For now, I think that the logical place where the market finds support is near the 20-day moving average. That's right around 38.20 for these Qs. So I think maybe another 45, 50 cents a pullback in the Qs. And like last night, last night I told you I didn't have a lot of good, what I thought were good low risk setups. And again, I find myself in that same situation here today. So this is going to be probably one of the shortest videos I've done as far as ideas for tomorrow. So let's go ahead and take a look. First up on the long side, we're just going to look at one stock, and this is Gentex. Gentex, someone actually this weekend liked this one. It was something I had reviewed for them, and we've got a healthy uptrend in here. We had nice volume in the stock today, and it was able to ignore the market weakness on a weekly time frame. I think we've got probably a retest of a test of 15.5, 16 coming. So maybe there's about $1 of upside in this stock. Here's how I'd like to play it on the long side. What I'd like to see it do would be to pull back to $14.55. Once it's done that, we're going to buy it above $14.65. So we want to see it pull back to $14.55, then rally 10 cents, and we'll buy it on that strength. The stop would then go just below this rising 5-day moving average at $14.44. So we're looking at about a 23-cent risk, and I think your target again is probably going to be up close to that 15.5 level. We could even say maybe it would tie this old high here at about 15.40. So a little less than $1, let's say 80 cents, but still providing us with a solid 1 to 3 risk reward ratio. So and the thing here is with the market uncertainty where it is right now, because that's how I view it, basically what you have to do from a money management standpoint is just lower your position size until you have more clarity. There's no sense in jumping into a market where you're uncertain about what's going to happen. This past weekend I had people saying, hey, I'm not sure whether I like gold long or short. Can you give me some guidance here and help me out? And when in doubt, stay out. And right now, I think there's a lot of doubt about where this market's going to go in in the intermediate term. Although again, I think we're in a bullish uptrend, so the benefit of the doubt still goes to the buyers here, but I'm just not finding the proper amount of what I perceive to be low-risk candidates for purchase, that it gives me a little bit more reason for concern than I might ordinarily have when I look at the technical condition of the overall market, the NASDAQ 100, the SPDR, the SMH, etc. Look at the previous video for more on that. So basically what I'm saying is lower your share size. Don't be in such a hurry to make all the money tomorrow or this week. And in fact, it's ironic, but not surprising to me, that last week we had a great week for trading. There were a lot of multi-point winners that I pointed out last week when everyone was supposed to be away and it was supposed to be low volume. But this week so far, I'm finding a very difficult time yesterday and today finding any good setups long or short, although we have had Halliburton and Imclone on the short side, which have been nice. We've got that Gentex down, so let's take a look at a couple of shorts, and then we're going to wrap it up here because, like I said, I don't have a lot to look at here that I really feel confident about. Baidu, symbol BIDU, is, the stock has had some trouble. It had this big gap over here after this big gap, and, from a weekly time frame, they might even call that an island gap reversal. I don't want to get involved in what to call it. Let's instead focus on what's really happening here. And that is, we've got a 50-day moving average that's declining right here. That's the green one. And we've got these lower highs, and we've got a little bit of support right near here, near the $77 level. Taking a look at an hourly time frame, you can see that we've now got the 10-day moving average about to cross back down through the 20-day moving average. and we've got a whole big mess of moving averages in here, meaning that it's really compressed. It's low volatility in here, and I think it means it's getting ready for a big move. Now, what I like from the bearish standpoint is that it gapped higher last week, trapped some people in, and then failed. And from failed moves come fast moves often. So let's take a look at how you might want to play this Baidu. And listen, this stop is probably going to be tight for the price of the stock, so you might want to adjust it on your own during the course of the day to see what's really happening. What I'd like to do is I think you can sell it short in the area between 77.35 to 77.50, in this range right here. We could put our stop just above that 5-day moving average, which is declining, and today's high, maybe about 78.05, 78.10. And I think the momentum really picks up to the downside below this 76.90 level. But where I think the stock can drop down to realistically is right around this level, let's say 72.5. So there's probably, I think, about 4.5 points of downside. So again, you might want to adjust your stop. I think for now, I'm going to go on record saying a stop goes around 78.05, 78.10. See how it trades if it gets there, and then decide whether you want to take it off. But don't give it much room above that, because this stock can get going very rapidly when it goes. And obviously, don't play 1,000 shares, because that's what you always play. This is a $77 stock. Adjust your risk according to the price of the stock as well. Next up, we're going to take a look at Sohu.com, symbol SOHU. And here we can see the stock's in a nice downtrend, good established downtrend here. It's found some support right in here, and you could look at this as an inverted cup and handle or a descending triangle. Whatever you want to call it is up to you. Again, I really don't like to focus on what to call these things, but focus on what is the stock telling me. And the stock is telling me, and why isn't my 10-minute chart coming up? Let's take a look at the 5-minute time frame. What the 5-minute time frame is telling me that the stock broke down pretty hard, and we had big volume here at the end of the day. Now the stock has just dropped from 21.70 down to 21.40, so I think we can wait for a little bit of a rally in this stock. What I'd like to see it do is to get up towards about $21.60, and then I only want you to sell it short on weakness below once it's dropped down to 21.45 again. So I want to see strength. I want to see it suck some more people in, have some shorts cover, get it up to 21.60, then short it back below 21.45. If it doesn't get up to 21.60, then forget the trade. Stop, I think, should go about just, again, above this 5-day moving average. Let's put it at about 21.92. That's pretty safe. That's a pretty good distance away. In fact, that's about 45 cents away. And I think on the downside, what you're looking for here is about 20.25. So you're looking at about $1 of downside opportunity and risking about 45 cents. That's about as low a risk reward I would suggest, and because it is a little bit smaller than, let's say, the typical 1 to 3 that you've been taught to look for, that maybe, if you were going to put $20,000 into an idea typically, and let's say do 1,000 shares of this stock, I would say because of the lower perceived risk reward ratio, that maybe you have that trade and only do 500 shares. Money management is a huge part of it, and as I often say, it's defense that wins this game, and that's how you're going to stay ahead during uncertain market conditions. And I will be back tomorrow. Hopefully we have a better trading environment than I'm anticipating, but be disciplined and be sure to on your stops. I'll be back again tomorrow. Thanks for your time.